Welcome to Taking Stock. I'm Amanda Lang. Coming up, a special look at food inflation in Canada. We know it's getting pricier, but is there any end to it? And how we make and sell food could be part of the problem. Plus, the hidden costs that add up at the grocery store. That's all ahead. First, a look at the cost and price of food in Canada by the numbers. Grocery prices are up 30% in Canada since 2019, with the average Canadian spending $1,600 more per year than prior to the pandemic. Food inflation is definitely on a new trajectory. If food inflation stayed on trend back in 2019, prices would be 17% higher, about half the increase we've seen. While the U.S. and Canada tracked pretty closely in price increases during pandemic, ours have surpassed theirs in the past year. The largest price jumps in Canada have been in meat, coffee and tea, and eggs and poultry. Factors like extreme weather, drought, and trade disruption can be blamed for some of the steepest increases. But while 30% of the food we consume is imported, 70% is produced domestically. The Bank of Canada notes that 2/3 of the price we pay at the grocery store are domestic factors, particularly wages being fed into the prices of processed foods, with the biggest increases coming between 2022 and 2024. And a weaker Canadian dollar made some imported food more expensive. Meanwhile, grocery bills make up a larger share of Canadians' budgets at 11% of the total. That compares to 8% for Americans. And the less money you have, the bigger the share of your budget is spent on food. The lowest 20% of households spent 14% of their total budget on food. Food inflation is expected to continue in 2026, with forecasts from Dalhousie University of 4 to 6%. It's clear that price pressures on food come from a mix of sources, both domestic and global. Leslie Preston is a senior economist at TD Bank. Thanks for being with us, Leslie.
My pleasure.
So one of the things Canadians really grapple with when it comes to the high price of food is who's to blame? What's the source of this? And it's such a complex mix. If you were looking at it and you could say, this is sort of where I would look first, is there one area you think is the biggest culprit?
Well, I think, your introduction really summed it up very well. In terms of, there's sort of what's causing overall food inflation. And what we did in this recent research we put out is look at our inflation relative to the US. Because in terms of those big global factors you're discussing, things like droughts, shortages in commodity markets, those would affect Canada and the US in the same way. So we were trying to figure out, what's different about Canada. And over the past year and a bit, the main thing that's been different about Canada is that we had counter tariffs on imports from the US. And a lot of our imported food, more than half of our packaged food imports come from the US. So what we saw in terms of, Canada's inflation being higher than the US, as that both the past weakness in the Canadian dollar and these counter tariffs, which have fortunately now been lifted, as being a key source of Canada's higher food inflation.
Yeah, and hopefully those were, part of a struggle that's over, although I guess we could see the other side of a CUSMA negotiation where things get ugly again, Leslie. When we think about kind of where prices sit now, a lot of Canadians did turn their attention to buy Canadian. They wanted to buy locally produced. As a rule, can we say those tend to be less expensive, more expensive, or is it just such a mix that you can't really make a generalization?
Yeah, that's a great question. I mean, for example, you mentioned coffee is one of the biggest, sticker shock items for Canadians over the past year. We don't grow coffee in Canada. That's not something we can buy domestically. At the same time, it's a bit complicated. Those beans are grown overseas, but often it's processed in the United States. So, that can be tricky. That's not something Canadians can avoid there. So, yeah, it's tough to say whether domestic food is cheaper or more expensive than what's coming from the U.S.
One other piece of this that the Bank of Canada is pointing to, of course, is wage inflation. You would expect to see wages play a bit of catch up, right, for the price pressures of the past few years. And for a lot of Canadians, that's a very good news story. We need wages to play catch up to higher costs. But how much of that then embeds itself into the price of food, almost reset at a higher level that we just have to get used to?
Yeah, the research from the Bank of Canada, it's interesting. They found that wages were a bigger factor in food inflation during the pandemic. You know, I think a lot of, at the time, grocery workers were some of our essential workers who still, you know, were showing up in person to their jobs despite pandemic raging. So, you know, there were wage increases there for sure. It's been less of a factor in the most recent run up in food prices. And particularly broadly in Canada's economy, our labor market has softened. Wage pressures have cooled a bit. So it's less of a factor now.
And obviously, when we think about kind of what might drive this in future, extreme weather, climate change, this is going to be here to stay. It may move around, right? It might not always be coffee or some other goods. But do you think that we need to actually just adjust mentally to a period in future where these kind of unpredictable pricing mechanisms will just happen?
You know, that's a great point. And I think you're right that we are going to see more unpredictability in food inflation. I think a big question for, you know, the industry coming up is, as, you know, we hear a lot more about dynamic pricing, as, you know, as retailers are able to adjust prices more quickly. You know, it used to be a lot more complicated to adjust a price, and retailers would do it less frequently. But, you know, as the ability to adjust prices more frequently or more easily, you know, that we could be seeing more volatile prices. And as you say, with the impacts of climate change as well. The one thing I would say, typically when we look at food inflation, and this is one of the reasons the Bank of Canada strips it out when they look at underlying inflation, is like a lot of commodities, typically periods of high inflation are followed by periods of lower inflation. You do get these cycles. So I think that is some consolation for shoppers in terms of, you know, we do expect food inflation to come down over the course of 2026. As you said earlier, you know, that's still an increase. That's not a price level drop, which I think is a big challenge.
Leslie Preston is senior economist at TD Bank. So good to have you with us. Appreciate your time. Coming up, what role does competition play in Canada's food pricing? That's next.